A lot going on in this highlight. First of all, we had popped and I had gotten bullish in here. And I was wrong. I thought we were going to continue to walk up even after a pullback. However, I knew where I was wrong at. If we got below 46, and then we also had our laser change, but we got below 46, it became 50% of this rally. And below that, not as bullish anymore. All right. So let me fast forward it and you just watch this market trickle lower. All right. Now, you cannot still be bullish, and I wasn't through 46. The point of this highlighted was I had to leave and come running back to see this get taken out. I missed this. And this was a multiple test to an iceberg that they're probably going to break out through. But I come back, and by the time I come back, it was right on it. And in fact, you could see my mic going on and off, coming back in. And they trade some of it, all right? And then bam, they go right through it. This is generally the reaction you want to be short for if you're looking for a breakout of an iceberg, right? So that was this dynamic that played out from an iceberg that was there. Now, let me show you something. When we back this up, take a look at what's going on right before the breakout. And you could see it in here. You could see the reds kind of get filed back in here, which are the shorts. Bam, the longs come in. All right, the longs come in. They lean on a big iceberg, which is an iceberg buyer, and then look at it, cruise through it. And they really broke out. This is the best breakout move pretty much of the session. All right, so then let's move along. Whistling. Now, if you did the kind of moral of this story and the tip as part of this highlight is if you get pissed because you missed something that normally might catch, you're going to do something stupid next. You just got to be calm. The trick your mind is if you caught it, maybe whatever, but you'll press if you try to make up for what you missed. All right. Now, here's another one. Now, this guy comes in. Let me back it up. This guy comes in. Generally, after we break, when he comes in, we bounce. But it didn't even give you a chance to buy it because it came in. Once it was identified, it hit 3,000. It was like, oh, man. And it goes right through it. Boom. Goes right through it. Now, here's the key, the crossover. If the market crosses back over by a few ticks, it's high probability bullish, especially when it's such a big iceberg, 3,000 contracts. It should not have done that. And then what's that price? 30 even. We talk about it coming back to 30 even and using that as subsequent support, which it was. All right. It never really broke back through 30. So that gave us, with this order, some real-time reads. Back up above it is bullish. Transitional moments, everybody's weakness is the real time. And even if you get consistent, if you're starting to struggle for a particular week or so, it's because your real time reads are off. And it's just trying to recenter yourself, seeing some obvious things, and this is what charts look like in real time, and just trying to get a sense of where people are stuck long and trying to get out, where people are stuck short, like just came in and trying to get out. That's what it's all about. Markets move not because people buy it, but because people want to buy it and they can't.